Welcome to XRP Daily Brief. Today we're diving into a packed update on the crypto market and several important developments that could impact XRP, Bitcoin, and the broader digital asset ecosystem. Let's begin with the market itself. XRP is currently trading around $2.20, down slightly after a strong move earlier this week. Bitcoin has shown renewed strength as well, breaking upward on key momentum indicators and pushing into positive territory. Ethereum is back above $3,000, signaling improved sentiment across major assets. We've also seen a remarkable move from Kaspa, which has surged nearly 50% in the past 48 hours. In crypto, there are always opportunities, always assets making significant moves. Staying informed is crucial, even during quieter holiday periods when many investors step away from the markets. One indicator showing that sentiment is slowly improving is the Crypto Fear and Greed Index, which has finally climbed back above 20 after weeks of extreme fear. Whether this momentum continues through the Thanksgiving holiday remains to be seen, but the shift is notable. Now let's move into some of the bigger updates shaping the landscape. First, XRP ETFs had a strong start when they launched, though flows have recently cooled. Still, compared to Bitcoin, the inflows are surprisingly close, and that alone is significant. Interestingly, Solana saw an outflow yesterday, a reminder that ETF flows can shift quickly depending on market sentiment and institutional positioning. There's also important ETF-related news. Nasdaq has filed to raise option limits on BlackRock's IBIT Bitcoin ETF to 1 million contracts, the maximum allowed. Expanding option capacity opens the door to substantially more liquidity and potentially more institutional activity. These changes can influence market behavior, even indirectly, as institutions prepare for larger-scale strategies. Another major piece of regulatory news: the SEC has outlined its revised 2025 plans, focusing on clearer rules and streamlined oversight for digital assets. This could finally bring the structure and transparency that many institutions have been waiting for. The more clarity the market has, the easier it becomes for traditional finance to participate with confidence. Speaking of institutions, Ripple announced that compliance and trust remain non-negotiable, highlighting that RLUSD, Ripple's institutional stablecoin, has been officially green-listed by Abu Dhabi's financial authority. That designation allows RLUSD to be used as collateral and in lending markets across the Abu Dhabi global market, one of the fastest-growing financial hubs in the Middle East. Ripple has been investing heavily in the UAE region, and this approval is another sign of growing international acceptance. Now, a necessary reminder: security in crypto remains a critical concern. A major South Korean exchange was recently hacked, with more than $36 million lost on the Solana network. Fortunately, user funds are expected to be covered, but this is yet another warning that security mistakes, phishing attempts, and suspicious links can lead to serious losses. Always remain cautious. The threat of impersonation and fraud remains high. Back to the broader market, altcoins are showing early signs of strength. Altcoin BTC charts have closed above key long-term indicators for the first time since July, hinting that altcoins may outperform if momentum continues. Whether this holds into December depends on many factors: liquidity, macro conditions, and institutional flows. Which leads us to what may have triggered yesterday's sudden market push. A new development is emerging. Kevin Hassett is now projected to become the next Federal Reserve Chair. He is known to be dovish, supportive of rate cuts and more flexible monetary policy. Markets often move quickly when leadership expectations shift, especially when those expectations imply softer monetary conditions, potential future quantitative easing, or a more crypto-friendly stance. Additionally, quantitative tightening is scheduled to end on December 1st, which is only days away. This transition alone is historically supportive for risk assets, including crypto. It does not guarantee a rally, but it does align with yesterday's positive reaction across digital assets. Of course, markets can move day to day based on headlines, global events, or unexpected institutional decisions. No one can predict the short term perfectly, but long term, the trends around regulation, institutional adoption, stablecoin frameworks, international cooperation, and clearer rules all point to a maturing market. As always, stay informed, stay cautious, and stay focused on the larger picture. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research and consult a qualified professional before making investment decisions. Thank you for tuning in to XRP Daily Brief. Stay safe, stay smart, and I'll see you in the next episode.